Time now to check out the latest earnings trends with Zacks Research Director Shiraz Mian. We're going to get a quick read now, update, if you will, on second quarter earnings season with Shiraz Mian. Shiraz, let's get right to it. The overall second quarter earnings picture, you say, has turned out to be better than the preseason expectations. How so?
Well, the folks on the street have constantly been second guessing the earnings story that's been unfolding in this cycle. If you would recall, it was in the middle of 2009 when we came out of the Great Recession. And while the economy has been kind of moving along in fits and starts, one standout element in the cycle has been corporate earnings. And consistently, quarter after quarter, we get these impressive numbers from the corporate sector, primarily driven initially by margin expansion and then some top-line gains as well. And there are many naysayers out there who would see that this really, so to say, could not continue. So that it was those concerns and fears, and then magnified by a few individual events. We had an economic slowdown in the U.S. There was the Japan situation. There were like the rise in commodity prices. And all of these factors were tempering expectations for the second quarter. And the overall, there was this feeling that maybe we are getting to the point where earnings will top out. And that turned out not to be the case. We got another impressive earnings performer. In fact, the trend as of now looks to be better than where we were in Q1. We have in finance a major underperformer, but when we adjust for that, the growth numbers, the extent of beats, and the percentage of firms coming ahead of expectations looks better than what we got in Q1.
So you say that margin expansion is a key driver in this second quarter earnings season, but I'm beginning to hear companies talk on the wire about moderating growth. So sales are not falling off a cliff, but they're not expanding the way they'd like to see them either going into the second half of the year. Is that a wild card here?
It is. In fact, over the last week, when we really got into the thick of the earnings season, I noticed two things. One was that despite what we are seeing in the aggregate growth numbers, we are not really seeing a commensurate growth acceleration in expectations for the third quarter earnings. And there is some in technology. There is more growth expected now than was before the start of the season, but then that's offset by weakness in consumer discretionary. So the overall growth expectation for Q3 is kind of the same. And secondly, these management teams, even when they beat, even when they come ahead both on the bottom and the top line, they are not unequivocally coming out and telling us that they see light at the end of the tunnel, that they have a lot of visibility and clarity. Granted, they are not giving us downbeat outlooks outright either. But as we had seen in Q1, the outlook, the tone of the outlooks, if one can take like an anecdotal from the reports thus far, is relatively on the weaker side. So there is, I think, a fair assessment, and it probably reflects the uncertainty on the macro picture. We had a fairly soft first half of the year. The consensus expectation is that the economy is coming back in the second half. We haven't really started seeing any evidence on the manufacturing side, on the consumer side. That is the case, but the management teams apparently are reflecting that macro uncertainty.
So put it all together, and when the dust all settles on Q2, what are the numbers going to look like?
I think we should have in the high mid-20s to high 20s percentage growth year over year. Across the board for the S&P 500. The financial sector most likely will be down year over year. It's down about 35–40% already, and that trend most likely remains in place. The leadership groups still remain the same as we had seen in the prior quarters. Industrials, basic materials, energy is a standout, despite some prominent misses, and again, technology. So the leadership remains the same. Some margin expansion, but not a lot. We're seeing about half of the ZAAC's 16 sectors basically producing contracting margins on a sequential basis. So we are seeing some deceleration on that trend as well. But top lines on the whole looks pretty good.
Okay. If you would like to keep track of Shiraz's latest thinking on earnings on a day-to-day basis, then you should be reading his Ahead of Wall Street column on our homepage, Zacks.com. Puts a new column up there for you each morning before the market opens, and there is where you can get his latest read on what the action will be all about and its impact on each business and trading day. With Shiraz Mian, I'm Terry Ruffalo.